up, motherfucker?
All right. What's up? What's up? Okay, shit. All right, let's see. What I gotta do here? All right. So we got our taco. Okay, let's see what we gotta do now. What do we do now? That's the question. Okay, let's see. Get this thing going. Yo, let's see. Come on, come on, come on, come on. All right, all right. Do. Okay, okay. Perfect. Everything's setting up nicely. Okay, so software still taking a hit. All right, let's go. Man, this thing is sucking all the memory and everything. All right, here we go. Okay, so software taking a hit. All right. You see this? Now this is pretty much the reason why I was like WebL and AIBU, because if you're not trading that, that's okay. Okay, you can hold it if you choose to. All right. The other ones like SOXL, GDXU, all that, you kind of like are worried, right? You're kind of going like, do you hold it? Do you not hold it? I'm out. Okay, I went in there on at the to the close. I think it was like Tuesday, and there was like all this stupid activity going on. They were like, "Oh man, it's Trump. Trump's going like, I'm gonna do it. I'm gonna bomb you guys." And in the morning, down overnight into the morning, it still was kind of down, and it's kind of recovered. It was going sideways, and then like an hour and a half into the close, there started some rumors. They were like, "Oh, there's some negotiation," and then like 45 minutes to an hour into the close, they were like, "Pakistan is the mediator." Okay, and then it started pumping. So it's like, dude. So I was just jumping in there. I was like, well, looks like it's gonna taco real good. Okay, so that was what was going on. So if we look at this, let's see. Uh let me do it on this one. Let's see. You remember when I said like I would not short semiconductors anymore? I shorted this, and I told you guys there's always a pattern. And usually everything goes in this kind of wave. They go like A, B, C. I don't know how big C is. There's a lot of people that just go like, well, based on how big the A leg is, I can guess where the C leg is, right? Some people do that. They really do. They'll just measure the move from here to A, and then they'll be like, well, after the B, it'll be the same size, magnitude. If that's the case, then I'm like, okay, well, then C is around here, right? Makes sense. It gets into this top area. The yellow and the blue are kind of like jello. Okay, this is actually hard jello because every time it gets the yellow part, it comes back down, right? This is the great place to short it because you never know how big the short is. This one was a good one because it lasted 2-3 days and it went down. This was only 2 days. This one was only basically 1 day. This one didn't go any further. This one was really just one morning, like pretty much in 30 minutes it was recovering. So you don't know how big it will go down after doing this, but then you did this. Okay, you go down, you go up, but look at how strong it went up from a lower low. And okay, I'll short it, but I'm not shorting no more because after it did this, you're done. You're toast. There's really there's really no argument that would say like, yeah, it's just gonna roll over now because the only way it will do that is Trump bombs Iran. That's it. And you guys know that that was not very likely. It's like he can, and this was like what, before Good Friday, right? This was before Good Friday. And you had that botched operation. Okay, 2 pilots go down apparently, or 1 pilot, 1 specialist, whatever. 1 plane goes down. and everybody was like, nah, that was some secret operation trying to get that uranium, and it failed. So that's why Trump started getting real mad and started tweeting crazy shit on Easter, right? So the only way to get the uranium now is you're going to have to send those Marines in. If you send those Marines in, you're probably going to have to wait until the end of the month, right? So you have to buy time. So even if you believe Trump is really going to put boots on the ground, you still have to wait another several weeks. And they already ran out a lot of missiles in the Gulf states, Israel, and all that. So you want ceasefire, because even if you're going to backstab them, you got to get a ceasefire first, because you got to buy time, because your little operation failed. So you can't do it with a few people. You need more people. So if Trump eventually does do it, he wasn't going to do it this week. So that's why you bet on Taco. And if you look at the 2 days this week, you see it. It was like creeping up into the yellow again. It went down from the yellow, creep back up, and then you saw this. That's enough to believe a Taco. That was it. That's all you need to do. And you got another extra, what, 15, 20%, depending on how. I got out like right away on the opening. I was like, that's done, dude. Look at where it opened. Semiconductors opened right there, which was the price before Nvidia earnings. This is the highest it ever got before today, which made a new high. So now you're going to ask me, should I short it? Is it a time to short it? Okay, we'll get back to that. Maybe, but not yet. Let's first look at where the SPX is. That's the important levels right now. Where is the SPX? Because I drew this line, right? I drew these lines. I said, okay, you know what? It's going to do this. A, B, C. If we are going to crash, it's going to do that. A, B, C. Now, I'm probably not going to say it's going to crash down to 5,500 or whatever this purple line is. It's more likely this orange line, which matches well with the new JP Morgan levels. So the JP Morgan guardrails for this quarter, if you remember, was 6,800 something and 6,100 something. So pretty close to where we are now at the top, because we're at the SPX is 6838. That's probably where the JP Morgan level is. That means we can't go much higher. Any attempt to go a little bit higher than this will be met with a rejection, because it acts like a magnet at the top. Okay. At the bottom, it acts like a repulsor. Okay. So this thing attracts to it. This thing repulses it. So every time we get towards this orange, we should see it fling it right back up. Every time we go above, we should get towards 6,800. But there's a flip line. The flip line is around 6,600 something. So let me draw that here then for you guys. Okay, somewhere around here. And then I'll change this color to blue, or no, make it green or something here. Okay, so if it's below this green line, it's going to work its way towards the orange. If it's above the green line, it works its way towards the top here. So I'll draw another line here. Okay, so let's say between these two green lines are where we kind of like hang out until the next bad news. So if there's no bad news, we're just going to go sideways and along these two green lines. That's it. That's the boring scenario. The exciting scenario is, oh shit, war's back on, crash. That's more exciting, right? I know people want the excitement, but we're not going to have that. The other thing coming up is earnings. Earnings is the other thing coming up. Next week, we'll start off with bank earnings. JP Morgan usually kicks off earnings season. And then the first, so that's probably around Tuesday next week. And then there's maybe somewhere around Thursday, we'll have TSMC. I don't know if the date's confirmed yet, but usually TSMC, people know where things are. And because the semiconductors is already so high now, it's hard for me to say like, oh yeah, we're just going to push up some more. More likely it'll just zig back down to the bottom green line, and then some other earnings will push it back up to the top green line, go back down, go back up, go back down. Very boring. Nothing to do. You could trade it for sure. I mean, if you do options, you could just short here, go long here, short here, go long here. You'll make a lot more money with options doing the zigzag here if you do it right. Otherwise, you got to wait. Okay, guys, you got to wait. There's nothing to do anymore. And we got 2 weeks, right, of ceasefire. So nothing to do. Boring time. So that's why all the excitement would be in software. Software is getting murdered right now. Software is getting murdered. It's amazing how quickly people just sold everything right off the bat. Right here, right at the open, red candle. The next one, another red candle. So 78 minutes. Red, 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 red. It just gave it all up. So when you do something like this, usually you would see it on news events or earnings. Whenever you see a stock do this, jump up right at the open and then just fade it. They call it a fade. You fade. Guess what? The next several days, it'll probably go down, 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 down like it's doing here. And it did it at an important level, right? You see that? It failed right away at open. It opened right at the bottom blue line and started puking. It's done. That means we're going to get to a new low, and that'll be the best time to buy software companies because now they'll get really cheap. Well, cheap is relative terms. If you do fundamental analysis and look at software companies, they kind of don't look cheap, but they're technically cheap compared to some historical prices, right? It used to be more expensive. If you look at Palantir or something like that, you're probably going like, hell no, this ain't cheap. This is still way too expensive. It should be a $20 stock, not $130. I ain't buying this. Definitely, yeah. If you look at it like that, you'll definitely wouldn't buy this, especially when it looks like this kind of big topping pattern, because once it cracks 126, bye-bye. Another 50% down to $60. So, yeah. But you know what? There's a lot of times when idiots, they didn't short up here in December, and they're waiting to short down here at 125. Could be a trap. It goes below 120, and then all of a sudden it runs right back up. That's what it always happens like that. When everybody... So when you look at something, it's like drawing a picture. Like, I don't have the full picture, right? Like, I could just... Let me just erase everything. Let me just do this. Let me just erase. Actually, TradingView has a nice feature where I could take away bars. Let me do this. Okay. Let me block that out. Okay. And then I'll put in front. Okay. Right? I do that. Okay. What's the picture now? What does it look like? How do I know where it goes, right? For me, I just see it going up. I would think it just keeps going up. But eventually I get more candles, more candles, more candles, more candles, more candles. Oh, look, it's going back up. It should go back up. Nope. Failed. 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 So it's like you're trying to guess what the picture is before the whole painting is completed. So a lot of this technical analysis stuff, it's kind of like you just look at these pictures and go like, well, if I look at this, it looks like it should go down. But everybody sees that. Everybody sees that it should go down. It looks like it's about to go down, right? But it doesn't. It might not. This might be a trick. It gets a lot of people excited that it's about to crash to $60. And then all of a sudden, you do the opposite, and it just runs right back up to the top at 200. And then we have to keep continuing this stupid game of like, will it drop or will it not? Because we're in a range. And if you look at semiconductors, the same thing, right? If you look at semiconductors, it looked like it should about to go down like 2 weeks ago, and then we didn't. We went to a new quarter, and now we have a taco, and it pushed it up. Now it looks like it should keep going up. So it should keep going up, right? See, that's the problem. That's why I told you I don't play this shit. Once I see it get stuck in a range, I'm not playing it no more. Like Palantir, I ain't playing that shit because it already gave up the range. You already see it. It lost its momentum here, right? And it started losing more and more momentum. And then eventually, yeah, it's just gonna run out. That's it. So, okay. Yeah. So you can't do anything about it. You really can't. Um, it could still be stuck in this range for many months. It might not allow it to drop. It might not even allow it to go back up far further than 200. It'll just keep zigzagging. Boring. It's great for trading, but it's nothing for investing. And that's why I told everyone to go to UwU, right? Back in February. UwU had a nice trend. It's moving up. Why do I waste my time with this? I'll come back when it makes sense. Right now, it doesn't make any sense, either short or long for now. We don't know what the complete picture will look like. It does look like it's going to short, though, like down here. So it will be good to short if it does break down. But I feel like now it's too late. You should have did that last quarter. If it wanted to break down, it should have did it last quarter. It didn't do it. Now we're in a new quarter. All the options are reset. So the whole game is. Okay. Yeah, I think that's it. So TSMC will be Thursday, I think. That's what we'll be watching. I don't think there's an official date, but that's the projected date next week. That'll be the first semiconductor stock to watch. Okay, so we're right here. Okay, and then I'll tell you like what I think. Should I short it? Should you not short it? Yeah. If you do short it, don't expect it just to go all the way back down here. It's over. Um, yeah, this was a very good taco, very strong, and so you're not going to you're not going to push this back down very easily. This is no way. I don't think so. You're gonna have to hope the S&P 500 just like really gives everything up and everybody goes crazy or something. So these are the rules right here. So after you make a major bottom, you count 1, 2, 3, 4. From the fourth day onward, you try to look for a big 1.7% plus move on the S&P 500 or the Dow or the NASDAQ, or you can do all three. You can check all three and see if it's true. You make a move here. We got 2.55%, and we had higher volume than the previous day. So this is called a follow-through day. A follow-through day. So this was a, I guess, rule of thumb made by William O'Neill, who founded Investor Business Daily. I used to have a subscription to that newspaper back in the early 90s. So yeah, I would read the Wall Street Journal and the Investor Business Daily. That was how we got our news back then, outside of like little websites on the internet. That was how you invested. And you would make phone calls to your broker. Yeah, there was E-Trade was probably a few years away. So you had to make a phone call to your broker to make it. And they would charge you a lot of money just to make a trade. A lot of money. Now it's so easy and so cheap. Practically, it's free, right? Now it's free. It used to be like a few cents. Now it's free because they sell your data to some kind of market maker, and then they jip you like a few cents on your trade. So if you put an order in for like $1 and 1 penny, they'll probably screw you over with 1 penny. They give that penny to the market maker. That's how they make their money now. So that's how it's done. So okay, 4 days. We got 4 days, right? Plus. So this was like 1, 2, 3, 4, 5, 6 day. The 6th day we got this. So usually between 4 to 7 days is the ideal, but it could happen after the 7 days. But usually I try to look for 4 to 7 days. And you got that. That's one. Does it mean it's gonna go up? No, because we know that there is a collar trade up here that'll block it. So it could go down. That's possible, but how much will it go down? If it goes down and erases everything that was made on Tuesday, I'd be worried. I'd be getting worried. Okay. If it just hangs out and goes back but bounces right away, cool. I'm cool. But if it just goes back down here to 659 on the SPY and then just stays down here many days, it just stays down here, I would be getting more and more worried that it's just about to puke. Okay. But I can't draw the picture of the future. This is not a prediction. All I'm doing is I tell you where the levels are. Once you understand where the levels are and you understand like there's a pattern, when you move up, it's A, B, C. Okay. Now, if you want to be more fancy about it, you could do like Elliott wave, which I'll talk about right now. I think I'll just talk about it now. All right, for you guys, and then we'll describe that, how that gets there. Ah, they took our jobs. All right, let's see what the comments are. No, I want to buy software because I'm expecting all the idiots are going to short down there and they'll give enough fuel to bounce. That's basically what I'm doing. So the title of the stream is, let me see. Let me get this up here. Let me create a banner here and I'll show you. All right. Okay. Let's see. Make my banner. Add banner. Scroll across to top, slow. Okay. Okay, let's see. Let me, oh man, I gotta do this. Scroll across, slow up. All right, do it. All right, you see that? That's what you want to do. So if you got into WebL and AIBU like 2 weeks ago on that Monday drop, you're fine. You're still up. So there's nothing you should really do. Now you're going to have to be like, well, should I add something more to it to make it more aggressive? Yeah, you can. You can buy CRWL and PALU, Palo Alto Networks and CrowdStrike. Why are these stocks dropping? Like every day they keep trying, the news keeps trying to talk about Anthropic, Claude, AI. So Anthropic is going to kill all these software companies. That's basically the narrative they keep pushing. Every time, go up a little bit up, smash it down. Well, that makes it cheaper and cheaper. Okay, so that's what I'm waiting for. All right, so let me get my new window up here, and then we can talk about something a little bit. Okay, let me see. Okay, let's talk about something a little bit. Okay, all right, let me get that. And then I'll go look at your chats. Okay. All right, got that going. Okay, good. All right. Okay. Beep. All right, good. All right, let's look at your chats. I mean, I everybody's gonna say AI bubble is gonna pop, right? Like, it's not gonna pop yet. All right, Craig, we get software now. Get out and wait for. No, I don't know how big the dip will be though. That's why I told you guys to get WebL and AIBU, because if you held it, it wouldn't matter. Okay, because right now, what is it? They're down like 2%, 3% at most, 1%. So who cares? IGV is down 4%. Huge. Okay, that's it. Huge. So yeah. So okay. So why did I tell you guys to buy oil? I gave you a lot of reasons before, but now I'm going to give you some other reasons why I told you guys to get into oil stocks. And here is, now I'm going to start talking about the DeMark stuff, okay? Because when this is what I've been planning this week, like working on a Substack. So I am going to start introducing to you guys these concepts, and these are going to get harder and harder to understand for people. But once you understand it, it becomes more powerful. Okay, because you're looking at things that other people don't look at, because very few people look at these things or understand it, and you guys get it now. Okay, so let's see. All right, okay, let me take this off. Okay, so let's look at this. Look at this. So I only have one thing on here. It's called D wave. Okay. You remember I did the ABC. Well, there's something called Elliott wave theory. Elliott wave theory is 1, 2, 3, 4, 5 ABC. 1, 2, 3, 4, 5 ABC. So there is a main wave that goes in 5 steps, and then there's a reaction wave that goes in 3 going the other way. So this one goes up 5, went down 3. It completed one big motion there. Okay, and this XOP is the ETF for oil and gas and oil exploration stocks. All right, it completed there. And where did it complete it? It completed it in January. Okay, after it completed it, it started moving up, 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 all the way till April. Okay, so once it completed the 1, 2, 3, 4, 5 in January and C, now I wanted to wait and see how well it would break out of 5, because 5 was where that last high was. This was very important for me to see. Once we got closer and closer to that 5 level, okay, and it was like towards the end of January, that's when I told people end of January, first day of February, I said, buy UwU. Buy. Okay, because look at where we are now. We're all the way up here. This is the first wave, 1 of a new 5 wave up. 1, 2. This is potentially a 2. Now, this 2 could still be lower from here. Okay, but right now, let's assume this is 2. 1, 2. There's going to be a 3. There's going to be a 4. And there's going to be a 5. All right, we still got a long ways to go on this move. Where's the next target? Up here, 231. Okay, so right now we're at 167.8, 231. That's the next one. So moving from here to here, that means UwU, NRGU, all the other oil stocks, that's a lot more gains to go. And that's just number 3. So this is 1, 2, 3. After we're finished with 3, there's going to be one move back down to 4, and then one final move to 5. So we still got 2 good years of oil company stocks going up. Or not 2 years, 1 more year, right? Because we got pushed back a bit. December, I think I said around November, December of 2027. That's the target date of the end of this. So you can make a lot more money on oil. This is just the first move. Thank you, Trump. Thank you, Bibi Netanyahu. Okay, so we got here very fast, faster than I expected. We got to 1. Okay, now the other thing was that why did I know that it would stop up here around there? Because remember, I told you guys, I'm probably going to sell the rest of it. Okay, now here's what you do. I take this tool here and I go down here. So let's look at the absolute retracement. You see that? Look at that. So this is the Fibonacci's. All right. These are the Fibonacci's based on DeMark rules. They're not the normal Fibonacci's you would get if you learn technical analysis. Okay. So golden ratio, blah, blah, blah. I'm not going to talk about that stuff. I'm just going to say you're going to have to believe me. Either you believe this or not. So based on the Fibonacci levels, look at that. We got 1.382. It says like the price is up here at 171. Next one is 1.5. That's not a real Fibonacci level. It's just a level that people have between the 1.618 and 1.382. So 185.8. And then the last one, 242. Look at that. We got right into there, right in the middle, right here at 1.5, right there. That was the end. So that's how I know where the end was. I don't know when the end was going to get there, but once it got there, I'm like, I'm out. This is the most it could go is like 200. Okay, but I rather just be keeping it on the safe side. And well, we blew through 1.682. We tested it a little bit. We got a little bit more juice. Maybe we get a little bit more juice and go to 200, but I'm not risking it. I bought it in February. I'm getting out here. I got my money. Get the hell out. And look where we're at right now. We're just teasing the bottom of this 1.382. So this is how you get your price targets. That's where you get it. Okay. I'm not getting in because I think based on cycle analysis, we still have June. We still have to wait till June because I think we're just going to go sideways. Just like the people in gold, they think it's just going to go back up. Wrong, right? Let me just do gold. Like I could do the same thing with gold right here. So let's do gold. Let's do the GDX gold miners. This is not directly gold, but I'll just use the gold miners. Okay. Okay. So let's see. Blah, 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 blah. Okay. I already did it on this one. Let's see. Okay. Let me take away this and this. So back in 2023 to 2024, I was telling people to buy up gold miner stocks, gold and silver ETFs if you wanted those too. You could buy all three. And you can see here 1, 2, 3, 4, 5. A, B. Well, there's no C. Where's the C at? No, C's up here. Okay. So, but the 1, 2, 3, 4, 5 is completed. And then after that, we just saw like it go up here. All right. Saw it go up here. And so I did a little measurement and I could see the first target was between $37 and $43 on GDX ETF right here. So you can see we ran right up to it and then we started going sideways. You see that for several months, pretty much a year since we hit the first target around July and May, and it lasted until like April in 2025. That's when we started trying to break out again. The next level was up here at 70, and we got there in October. So you see 1, 2, 3, 4, 5, A, B, C, and then we got another 1, 2, and we started going up again. So, there is, and then the final target was 3.618. Boom, we hit there in this January. That was pretty much the end, right? Because that was just before the silver started crashing. I think several days, probably a week before it. So this was the final target right there. And we went back down, we went back up. You saw that. And now we went back down and now we're trying to get back up, but this is the end. If this is 5, then it's going to be A, B. I don't know how high B is going to be, right? This might be it. It might be it for gold miners. So you might want to just do GDXD pretty soon, and it's just going to go down here to 55. That's the target. If it goes down, it's 55. It's the next target for GDX, and then you're going to have to figure out what GDXD would be if it goes down from 100 to 55. Right? That's basically 50%, and then you take 50% drop. Multiply by 3, and then you just do GDXD going up 150%. Okay, that's how you do it. Is GDX the U going to 300? Yeah, you're probably Delulu. Yeah, you're probably Delulu. It ain't going up there. It ain't going back up to no 300, man. You're done. You're done. If this wave is complete, then yeah. But we don't know if the wave is complete, right? We don't know. It could still go up. B could still keep moving up, 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 because here was the initial B. You see the plus signs? This was like a B2 was over here. And then now this is the new B2. It could still go up. Another B2 up here. It could still go up for sure. But we don't know yet. And that's why you have to put these on. Now you put these sequential numbers on. Now you have to figure this out. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right. What does that mean? Well, after you do a 9, now I have to wait for a 13. You see, this is complicated. But so that's why a lot of people they don't study this. They're going like, this is crazy. This is like, why do I learn all these numbers? A B C 1 2 3 1 2 3 4 5 6 7 8 9. This is crazy. Why do I bother doing this? Okay, this was created by DeMark. DeMark was some kind of Rain Man, all right, in the trading world. He created these indicators that he studied patterns. He would just be staring at charts every day and he started noticing patterns. All right. And then he found a system where he figured out like there was these 1, 2, 3, 4, 5, 6, 7, 8, 9s, 13s, and 9s. And then he started applying it to the Elliott wave stuff. So you have the 1, 2, 3, 4, 5, ABC, based on that with the Fibonacci. Crazy. The guy is nuts. But you know what? The reason I'm doing this is because there was this trader called Rick Bensignor. Rick Bensignor is retired. All right. He used to work for JP Morgan and all those other banks for the trading desk. And he was the one that said, like, I follow only two things. I follow the DeMark stuff here, and I follow Ichimoku clouds. Okay. Ichimoku clouds. Ichimoku clouds is Japanese. All right. These clouds over here. You see that? We're right back up to the bottom of this cloud. If Rick was looking at this, he'd probably be like, I think this gold move is done. There's no more to gold. It's going to be really hard to get past this cloud. That's what he would say. So he'd probably be like, I don't think it's worth it to stay in GDXU anymore. I don't know. Up to you. But I think what you're going to have to see is like a 13 count because it already completed a 9. You're going to have to wait for 13 to finish, if it finishes at all. And that's going to take a while, right? You're going to have to wait at least 13 days, trading days, before it completes. So at this point, it's a very hard sell for me to tell you like it's going back up here because this is the resistance at 115 right up there. Okay, so yeah, and if we go back, I can show you all the other charts. It's just going to be like, nope, doesn't work. Okay, yeah, all right, what's the other stuff to look at? SOXX. Okay, SOXX, do that. Okay, let's see if I got time. All right, 6, 7. Okay, I got some time. Let's talk about this. Okay, if we look at SOXX right here, that is the projected level that this 13 gave. After we finished this 13, it was like, this is the highest we can do on SOXX. We're almost there. So I'm going to wait a little bit and say like, yo, if it can get back up here, maybe I'll short it. Maybe. So let me take this away. Okay, let's remove all that. Let me just go back to here, the waves. 1, 2, 3, 4, 5. A, B, C. Now we have a new 1 on SOXX. So are the semiconductors going to go up? It looks like it. It looks like it could. Okay, so let me do this. Then let me get the retracement here. Okay, let me do that. Let's see. What's the levels it gives me? Right here. These are levels. 1.382, Fibonacci 1.618. Right here. We got slammed right up here in July, and we went sideways for a little bit, right? It's July to September before we started breaking out again. Okay, that was the first move. Now, let me do this. Let me get, what's the levels up here? The next level is here at 328. All right, we got there. Okay, now we're trying to get to this top part at 1.618, and then it's close to this 2.618 Fibonacci up here. So yeah, this might be the next place to stop. All right, somewhere around here, if semiconductors want to go up anymore. Maybe, maybe not. All right, what about from the bottom of this guy here? This was a big bottom, so I might as well just do one more for you guys. How about that? Where we're at now, 1.382, we got there. The next level was up here, 1.5, which is next to the 2.618. So I think there's a lot of levels that point that it will try to zigzag somewhere between $400 and $369, right? That's what it looks like what it was gonna do. And then from there it can move up again. That's what the bulls want to hope for, right? The bears that want to short this guy, this AI bubble, whatever you want to say, this thing better reject it real soon and go back down. But I don't see it happening anymore. I think this is way too strong of a move. You're basically hoping that every earnings is bad. I don't think the Iran war is enough, because you have to remember the Iran war didn't do much damage on semiconductors. Everyone tried to go back to semiconductors. Everybody did, right? Everybody just kept going back here because every time it went down, it was just bought up again by like SanDisk, Micron, all that. You know what the big mover in semiconductors is right now is Marvell. So Marvell was one of the last ones to report earnings. So after it reported earnings, it finally started going up again. Okay. Marvell has been the worst performing semiconductor stock. Like you look at this going into April, look at it. It barely got anywhere past what, $90 in October. Like, and $90 wasn't much higher than where it was in July. That was 81. And it was still below the high of January of last year. So you can see it's like up, down, up, down, up, down, up, down. Look at it now. Look at it now. It's trying to get to this part here, 128. That's the wave 3. That's the target. So I'll watch this. I'll watch the semiconductors, and I'll see if it's worth it to try a short. But I wouldn't bank on it anymore. I don't think it's that easy to short it. It was fun for a while to short it at that below that yellow area I showed you guys earlier, but right now, no. I have to see some earnings, man, first. You're gonna have to see some earnings results. So that's why I tell you guys, just go back to software. Software is easier to tell because software is just oversold now. Okay, look at IGV is almost at 5% now. Look at it. Everybody wants to get out of this thing. Everybody thinks it's so easy to call this now. Everybody wants to short this now. Bro. All the idiots that want to short this now are probably the same idiots that wanted to go long oil when it was already moved up like over 100%. Man, come on, it's done. Come on, you guys are too late to the party. The party is about to be over. Everybody's in here right now. So every time you look at this, it's kind of like that. You have people going to one side of the boat, to the other side of the boat, tilting it back and forth, back and forth. Everybody thinks it's way easy to short this thing because it's so obvious. And that's the wrong move. You have to be a contrarian. If everyone agrees with you, then I have to stop agreeing with you. And we're at the point where everyone agrees and thinks software should go lower. Yeah, I thought that. I thought Palantir would go to 60. I don't think that no more. I think you guys are not going to make it. So with the DeMark stuff, let's see. It's 81. It thinks it's 81 is the next move down. That'll be it. Okay, so somewhere I would say 60 would be pretty good if I shorted that thing. But DeMark says conservatively is 81. All right, 60 to 81, still good. Still a good short if you think it is. Because the target was supposed to be up here at 184 if it went up. We have 1, 2, 3. Could be a 3. If there's a 3 move up, it's going back to 184. All right, so close to 200. It could go back up there. But if this is really a 1, 2, 3, 4, 5 down, then the next move is 81. So it's either going to 81 or 184, right? That's it. That's it. So we have to wait for the next shoe to drop. Software companies don't report earnings until probably later in the cycle. I think late May is where most of the earnings will be for software companies. Palantir, I think, reports a couple weeks earlier than the rest of the guys. So maybe sometime mid-May, right? So then the other ones will be like late May into June. Okay, so you have probably until June for this to work out. So yeah, that's it. That's it for that. I think that's it. Okay, let me take a break. Let me read your chats. All right. Yeah, what's up, 12 man? What's up, Peaksy Poo? Yeah, what's up, Kyle? What's up, DJ MFB? Yeah, talk about the AI bubble. I don't know, man. Everybody's gonna say AI bubble, this and that. They've been saying it for years, right? Like, what? I mean, at this point, didn't they already start talking about it in 2023 when we looked like we were going into a recession? I don't know. You can't trust these people about that. Okay. Okay, someone sawed off a catalytic converter. Yeah, they'll keep doing that. It's always seasons too. They'll saw off like a Prius, and or they go off with something else. It depends on the supply chain. So yeah, there's always a black market supply chain. So if there's like some kind of factory that processes the platinum and palladium from certain cars, they'll tell it down the line, and then the foot people will go in and be like, they'll target certain models, certain cars at certain seasons. So depending on the season, your car could be highly targeted. Okay, let's see. What's up, Quantum? Running it through the week. Okay. Why hold? Because we're just trading. That's why. All right. So let me show you this. Because it's a trade. It's a good trade. And when you can make 100% in 2 months, 3 months, you do it. That's what it is. That's why it's called a trade. The difference between a trade and an investment is just your time horizon, I guess. You can think of it like that. That's about it. An investment is something I would hold for 10, 15 years. I don't think a lot of people do that anymore these days anyhow. Everything to me is like a trade. It's just like, how long is it, right? That's it. Okay. All right. Let me see this. Let's see, do I have it on the thing here? Okay. All right, I got some stuff. Okay, let's put this up. All right. Got that. Okay. All right, so this is the first one. Okay, look at the NASDAQ right here. Look at the NASDAQ right here. This is what I screenshotted yesterday. So this is the cycle chart here. So the magenta, the neon, fusion, whatever you want to call this color, it goes up until June. We have 2 months. Okay, the NASDAQ going up. Now, it could go up because of semiconductors. Maybe not, though. Or it could go up with both semiconductors and software. In either case, there is a potential. It doesn't guarantee that it will go up. All it does is tell you that there's a good chance you have at least a couple months of it going up. That's all we could say. It could just go sideways for all we know. But it's less likely to go down. That's all it's telling us. It's not likely to go down. It still could, but it's not likely. And there's potential for it to go up. If it can't go up, however, we're just going to go sideways then. That's what we're going to do for 2 months. Now, the good thing, though, is you are not restricted, right, to only buy NASDAQ or S&P 500. You can buy whatever you want. So all the people that just had S&P 500 for the last half a year, we just went sideways, right? Look at that. We're right back at where we were on the NASDAQ since September, October, Halloween, basically. So from September, October into April, we went nowhere, sideways, boring, made no money. But if you went to oil, you made money, right? So I'm telling you that if you go into software, there's a chance you can make money. I'm not guaranteeing it. I'm just saying that if we are going to go up on the NASDAQ, okay, then where would I place my bet? What's going to drive the NASDAQ up? Well, maybe it's the software side because it has a lot of catching up to do. I have my doubts that semiconductors can do it all by itself anymore. Okay, semiconductors can try to keep the Nasdaq going sideways, but you need some help. You need some help. All right, so that's what I'm saying. Okay, I think I have one for the S&P 500. Is the same thing. Yeah, right here. Same thing. It shows June. Okay, we have till June, and June is when most of the earnings are already out. So maybe we'll get lucky. Maybe there will be peace in the Middle East. Maybe there'll be good earnings. Maybe there'll be both peace in the Middle East and we have good earnings. If that happens, then software will just go up anyway. Doesn't mean that I believe in AI or not. I just believe that it's a good trade. That's it. Because everybody's bearish. So I'm going to go opposite of the crowd and go bullish and hope that the earnings are not as bad as people expect. And that'll be enough to go up, 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 up. So this is why I think you guys should be serious about doing WebL, AIBU, and maybe if you're more adventurous, CRWL and PALU 2X leverage, Palo Alto Networks, and CrowdStrike. Start with that for now. So as you see the software going down, 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 I'm gonna tell you guys like, oh, this looks like a good price. This looks like a good price. This looks, and then we'll see. Okay, from there, that's what I was gonna do with the Substack. Basically, that's the first step. Okay. And then the next step is to do the boomer portfolio because I have a set of stocks that I like right now. Let me redo the banner a bit here. Let me edit it a bit. Okay. Okay. Put it back like this. All right. Okay. All right. The other one is Moderna, right? Okay. I will go back to that later. But yeah, these are the ones up here, the MVP stocks. And I added a couple more. And these guys are really going to explode up, I think. Yeah, those would be the ones. All right. Any other chats? Okay, Mike says still have a profit on Palantir, only 20 shares. Yeah, you can hold it, I guess. I don't know. There's definitely better opportunities for the money. But you're gonna have to see. You're gonna have to see. But yeah, I think WebL and AIBU are gonna be the next 100%. So when I do like big trades, okay, big trades, what I expect. Yeah, what I expect is that like I put a lot of money in and for longer time. For the little day trades or the two-day type trades, I'm not going to stay there very long and it's very risky. I'm not going to put much money, right? It's going to be like what 10,000, 20,000, maybe at most 30,000 if I'm feeling really bold about it. But when I do these longer trades with the UwU, right, it's basically like 50 to 100K, that kind of stuff. and oil was supposed to be much longer. So I expected to be buying some oil stocks to have a longer, bigger portfolio of it. But we went there so quickly with UwU, I didn't bother doing that. So this one is just going to be like 2 months to 3 months, right? Something, maybe it's just going to last 1 month. I don't know. Then yeah, it's probably just going to be 50,000. I'm going to bet completely on all this stuff. And if it gives me another 50K in 1 month, 2 months, then yeah, that's it. That's it. That's all I expect. Because it's not going to last long. Because once we hit June, it's just going to roll back down. Yeah. Okay. That's it. All right. So let me put this up. Let me put up this picture up here. Okay. All right. So what do you guys know about forward PE? Okay, what is forward PE? Let me get this. So since you guys want to do some fundamentals, I'll give you some fundamentals. So this is another reason why Warren Buffett wouldn't buy this market. Okay, we gave you a lot of reasons last time I was here last week. All right, so let's look at forward PE. This is the forward PE right now, 21.19 as of April 1st. Okay, so this is the forward price to earnings ratio. Now, Warren Buffett likes it when it's down here. You see that? Very cheap, closer to 10. Now, since 2018, you saw this. You know, this is another reason why that whole stock market move before COVID-19 lockdowns was so suspicious. You see this? The forward PE was rapidly rising all throughout 2019. So it went from the bottom of the correction of 2018. So it was like a low of maybe 16. And then it went right up to 27, very expensive. So that was very suspicious, very suspicious. Somebody was just mad pumping the whole stock market up just before COVID lockdown crashed everything back to earth. And still, it's still expensive. It's still 16. I mean, Warren Buffett would love it if the whole stock market just went back here. So he's not going to be in a rush to buy stocks right now, right? He's just like, well, I can just wait. I can just wait. Eventually, this is going back down here. Then I'll buy. That's his style, right? He's a value investor. He won't buy anything that he feels like is way overpriced than what it should be. So one way to look at it is the forward PE ratio. And if you look at the forward PE ratio, you could like look at how well the stock market did at certain PE ratios, the forward PE ratio, not the past. Okay, the forward, the outward looking PE ratio, what people expect the PE ratio to be in the future. So if the PE ratio is at a high level, okay, somewhere around here, right, 21, so just below this green bar, vertical line, whatever, you could see like, it's not very attractive because statistically, the return that I would get from the S&P 500 when it's this expensive goes between plus and minus 2%. I could buy a T-bill. I could buy a T-bill, and it gives me what, 3.5, 3.6% right now. I made a mistake. Last time I said it was like 4.5, 4.4%, 4.5. I mean, the last time I got a lot of T-bills for my parents was during the same time I switched them out for gold. So I forgot that those T-bill prices went down by 1% already. So it's not that attractive when you're taking into account inflation. Okay, inflation is about like 2, what is it, 2.5 on the PCE. It depends on what inflation number you're looking at too. I know a lot of people like really don't like the Fed inflation numbers or the because it's all BS, which is true. If I took out eggs, if I took out milk, if I took out a lot of stuff that people usually buy. Inflation is a lot higher, but they don't count food in the inflation numbers. That's one thing. Sold Nebius again. So among Nebius. Yeah, I remember you mentioned that stock. Uh I only have Light and Sienna because those charts look good. So yeah, I don't know. I don't know if we'll have to wait, right? A little bit more how the market does. So it's not that obvious right now. But I'll get back to those charts when I get back to them. Okay. Let's see. Oh, flip Micron too. Yeah, Micron is a good trade if you played that one. I didn't play that one though. Yeah. Huh. Okay, we got that. All right, all right. Let me mention this one next. Okay, so yeah, so now you can see why, Warren Buffett just has all this cash. He has 382 billion. He just keeps building cash, Everything he sells, he just kills it. Yeah. Your dollar is still worth 3 cents compared to what it should be. Yeah, but that doesn't matter though. I mean, the problem is liquidity. The matter is liquidity because dollars can be easily converted to something else very quickly. When there's a market tantrum, everyone goes to dollars. Like that's why when you saw COVID, everybody ran to dollars. Everybody ran to dollars. Gold went down, silver went down, stock market went down, because the dollar has liquidity, and that's another reason I talk about the dollar milkshake theory. That keeps the empire running. We built systems to support the dollar, and that's why when you cut off Russia from the SWIFT system, they basically had to figure out how to make new systems outside of the dollar, and that's annoying because we spent a lot of years building the infrastructure, the banking system to go into dollars. Everything goes into those dollars, and dollars is not a physical piece of paper. It is a ledger that you keep right in a computer. That's it. And that's why those Bitcoin guys are always like going the route like, damn, man, we got to get off this dollar drug and Bitcoin's the replacement or whatever. I don't know. You guys can figure that out. I'm not going to get into that. Okay. But yeah, follow through day is what I'll talk about today. And that's it for that. Okay. Anything else? Last thing. Let's see. Last thing to talk about. And then we'll go back into the charts and we'll look at two particular stocks. And that's it. This thing right here. So every time we have a pump in oil, eventually it's bad news, right? I think everybody can understand why, because inflation and all that. But yeah, so every time crude oil goes up over about 100%, right? Probably roughly 100% in 1 year. Okay, then that precedes the crashes that we see here. I don't think it really had any reason to cause the 1987 one. 1987 was another reason, but whatever. Okay, we had a 1990 crash, a dot-com bust, 2008 financial crisis, 2022 bear market, and now it's back. Okay, so that kind of shifts the timeline up a bit. Yeah. Bro, if you're worth well, that's why do you want me to bring up the chart with the gold versus dollar? Or not gold versus dollar, gold versus housing prices? I mean, I know what you're talking about, but the reason is that there's no liquidity in gold. I can't sell my gold like very easily, right? That's the problem. People will sacrifice that if they can get 3%, okay, to 3.5% on the T-bill. That means their dollar at least can tread water. Okay. So that's because inflation is 2.7, 3%. If my T-bill gives me 3%, it cancels each other out. That means Warren Buffett can sit here and be fine because he's not actually losing money because he gets 3%, 3.5%. If he has some bonds, I don't know how those are worth, like basically 5 years, 10-year treasuries. He could hold hold a bunch of old ones because they're not just buying T-bills. They have old bonds that pay, because if you bought a bond back in 2022, they dished out 4%. So he still has instruments that pay 4.5% still. And that means like it care of the inflation. So the inflation is killing your money, but the T-bills pay you interest, so it helps you out. So he can just stay here. He's not making or losing any money, and then he could just stay here, right? He basically makes a slight profit right now, probably maybe $2 billion each year, $1 to $2 billion for his 382. Of course, that's not a lot of money, right? Percentage wise, but at least he's not losing money. So that's why he does this. That's the reason. Okay. Now, let me give you the gold and housing. Let me show you this. Because if he has cash, then he can easily dump all his bonds and go back into stocks. That's why he does it. If he just has a vault full of gold, he has to convert that gold into dollars back into stocks. That's why it. Okay. He also has to buy guards to protect his gold because I don't trust anybody holding my gold, honestly. There's a lot of people stealing gold and nickel and all kinds of metals. Okay. That's really a big problem. That's really a big problem. There was a huge scandal with the London Exchange. Like a whole shipment of nickel was actually fake nickel. It shut down the whole London exchange for like a day. Oh, what's up, Solid Snake? What's up? Money market is almost 3.5%. Yeah, that's correct. All right. All right. All right. Okay, let me add this. Right here. So I plot out the housing price, okay, in dollars in the light orange. I plot out inflation based on the PPI. Okay, so that's from the Bureau of Labor Statistics, the price producer index. And I have this black line, which represents your house price in terms of gold. Okay, so I believe the yellow line is like, or orange, light orange, or whatever you want to call it, is a 2-bedroom house, a median 2-bedroom house price in a city. I think it's a city. So the average US city. Okay. And so if you look at it in terms of price of gold, so if I had to buy houses in terms of ounces of gold, back in 2001, the house price in terms of gold was about 610 ounces. Okay, so I need 610 troy ounces of gold to buy a house back during the bubble days, right up here. Now, after the dot-com bubble, the price in terms of gold dropped. Okay, and then you had the 2008, which dropped it more. So we got down to 126 ounces of gold. So if I just had gold and I could buy houses in gold, this was very cheap, right? Compared to 2001. All right. If you looked at it in terms of dollars, you would think like, yo, houses is more expensive than 2001. What are you talking about? Well, in terms of gold, it's a different story. All right. So when you track it in terms of gold, let's say I could only buy a house in terms of gold, then it looks very different. There's a different picture now. But if I looked in dollars, how come the price of in dollars keeps going up and up and up and up? But when I look in terms of gold, the price keeps going down and down and down and down. Actually, right now, the price of a house, a 2-bedroom house in a city, is 84.44 troy ounces. That's lower than it was during the 1980s crash here. There was a huge 1980s crash from this point in gold. Or I don't know what happened here. I don't know. I'm not that old. All right. I was just a little baby in the late 70s. I don't know what the heck was going on. You guys tell me what happened here. But something happened here, and it made it crash all the way down before it rallied back up. So when you look at gold, it looks like a completely different picture. A completely different picture because your dollar keeps getting depreciated, right? But the problem is I can't go to a realtor and be like, I got my bars of gold with me. Here's a bar of gold. Give me that house. They'll be like, the fuck? I'm going to report you to the cops. You know, because like what? FDR took us off the gold standard. You remember 1933, FDR took us off the gold standard. We are no longer, we can't go into a bank and be like, I have $1, give me my gold, bitch. No, it's a Federal Reserve note. It doesn't say gold certificate. Okay? We got off that standard. Then later, Nixon got us off, the whole world got off of the gold standard. Okay, so America got off in 1933. Then the whole world got off in 1974, 77. I don't know, whatever, something like that. 74, maybe 74. I don't know, whatever. So anyway, so a lot of stuff happened. So that's why you can't do that. That's why Warren Buffett has to buy U.S. Treasuries. This is the whole point. This is the dollar milkshake theory. The dollar milkshake theory. The system was designed to make everyone get into dollars. And that's why Iran is a bad guy. Iran's a bad guy because Iran doesn't want to play by the rules. If you want to buy oil, you have to buy it with dollars. That was the deal made with OPEC. OPEC was founded, right, by a few Gulf states and Saudi Arabia. They all agreed that if you want to trade oil on the market, you have to buy it with US dollars. So this made all the governments around the world have to get dollars. And if they get dollars and they don't want to get murdered by inflation, they buy treasury bills. Okay, so that's why they buy our debt. They buy our debt. We pay them 3%, 2% to give us. So that's why they can money print forever. That's the reason. So that's it. My dad worked for Gulf Oil back in the day. Yeah. Probably exciting times. Probably amazing. So yeah, that's it. So now you kind of understand why we're stuck with the system, and there are ways to kind of like manage the problems of the system, because most people, they're not going to take their money in their wallet and just go ahead and buy T-bills, right? No. Most people don't even know what the hell a T-bill is. So that's why if you just keep pure cash, it's just, depreciates. If you live in Turkey, it's worse. Like the inflation in Turkey is like 30%. So if I had Turkish lira, it will be worthless in seconds. Every second I hold a Turkish lira, it's like it's like something burning a huge hole in my pants within like a few milliseconds. That's how bad things are in the other places. So, but this is why you have to, weigh the risks and reward. So Warren Buffett would look at this and be like, damn, should I buy software companies? And he would be like, but then his brain would be thinking, the risk is too high. The risk is too high. The valuation of the S&P 500 forward PE is at 2%. That I mean, not what is it? 21, 21. That's too high. Everything's overvalued. I don't want to buy it. So that's his philosophy. He'd rather buy the T-bills and the bonds and all that stuff. So yeah, he's not going to take this. Anyhow, yeah. But yeah, if you look at SOXX, I don't know. I think I'll wait for 380 and I'll just be like, yo, I'm thinking of shorting you now, just cause. Why not? But I think we have to wait for this to finish its move. But yeah, I drew this. I don't know, man. Do I think this is going to happen? No, I think it's over now. This is kind of too strong. And then you look at this here. It's like the MACD is curling up again. Oh, this is the weekly chart too. It's like, ugh. It's getting harder for me to believe it's just gonna go down there. At best, it could go down to 6,100. Sure, S&P, but I don't think so. I don't think so. I think it'll just the worst case. It'll just be annoying. It'll just annoy the heck out of people. So if we look at semiconductors, it could do this for sure. Like once it's done with this, you know what it's gonna do? It's just gonna be like, let's go back down here, and then we go back up, and we go back down, and we go back up, and we go back down, go back up. So it's just gonna do this. That would be funny, but I think that's probably the more likely case. So it's this. Okay, now we go down, now we go up, now we go down, now we go up, now we go down, now we go back up. See, then I do my ABC again, and I'll do this. I'll be like, oh, okay, now we go up, now we go this, now we go that, and then we go back and forth between the yellow and the blue, yellow and the blue. Boring. Really irritating for most people. So overall, this thing will just be like some kind of a really huge range from January, and it'll just keep going until June. And then once June hits, maybe June will be the time we can finally decide, will semiconductors and the AI bubble pop? So back to your question, Tropes. AI bubble, AI bubble, AI bubble, right? The AI bubble. Let me see. Where's the AI bubble? Why hold for 3 months if it's going to dump? Well, I told you for a reason now. Because I can make money while I wait. And one way is to trade. Another way is to use options and doing some tricky business. That's another way you could do it. Like you can make money from stocks going sideways for sure. If you construct a options trade that just says it's going to go sideways. Yeah, you could do that. Definitely. No problem. A lot of people have shares and then they'll use it to get options to make money while they wait as it goes sideways. Of course, you assume it's just going to go sideways and not just completely puke, right? I don't know. It could just do that anyway. And that's the risk you will take. Okay. All right. I think that's enough of that. Let's see. I wanted to talk about some new stocks. I have, well, this is not a new stock. I talked about a little bit. It was in the Boomer portfolio. Air Test Systems. Okay, I've been waiting for this for years. Okay, let me get the weekly chart. This is what I've been waiting for years. So I was in this stock in 2022 up until 2023. These guys, they do wafer testing, okay, specialized testing for wafers, semiconductors. They were very popular during the Tesla days because Tesla was using silicon carbide and gallium, whatever. And so they were very popular for a while. Okay, the hype train was building. So it kind of got started in 2021, the first move up, because it hasn't been a very good stock going since like the dot-com bubble days. So pretty boring, but then it got a lot more interesting. Okay. So it went from 8, up to 43. And once it got up there, we started going back down, rolling over. So then I started going like, well, I'll wait. I'll wait and see what it does here, right? At 7 and 8. So we hit there last April. So we're 1 year in and it went back up. Okay. And it's like, oh, okay. Look, first trouble was 24. And then it started going up to 42. Okay. Last week, I don't know. It must have been some kind of news, or maybe it's just a lot of people decided, yo, it's the end of the quarter. Let's get in. And Air like reports earnings the first week, usually of the new season. So they report earnings before the banks do. And so the last week was 36%. Now it's 54% right now. Man, bro, it finally broke this after several years. And looks like if you count the range from 2021, it's been a while, man. So this is something I have to say could be a big mover. Okay, this is not done then. Problem is it's part of the semiconductors. If you think semiconductors is really ready to go up, then you might as well buy this one out of all the other ones. But if it's not, if we're still stuck in a range, then there will be a chance to get it back down at 42 again. The problem with recommending this is it's very nasty, okay? Because it could go up 1 week, like 37%, and then several weeks down the line, it drops 24%. It's not a nice stock to hold. So you're going to have to be having hands of steel to be enjoying this kind of action. It's good for trading, though, if you can manage all this. I'm sure you probably would think this is good for trading. Now, the other ones are like Sienna, right? Let's go. So this one we talked about before. Sienna, Lumentum still looks good. These stocks survived the Iraq stuff very nicely. Very little damage done during that time. Very good trends. So Air, Sienna, Lumentum, these are the ones to get into. Okay. Now, the other one was two industrial stocks. So I'm going to do two industrial stocks, right? One of them was like Deere. I said Deere looked good. That was like last quarter. I said Deere looked good. And after it broke out of here in January, you see it did a test during uh, Iran stuff. And now we're back up here. So I like it. Right, recovered nicely. It's holding. So Deere, and then Caterpillar. Caterpillar is the other one. So those two industrial stocks, probably the top ones. I'll choose from the industrial sector. So I picked those two from the industrial sectors. I got Air from semiconductors. Okay, so you see that? Very good recovery there from Caterpillar. Now it's making new highs. So this week. Okay, we got those two. So we got those two for that. And then, let's see, do I have to mention anything else? LNG we talked about. Okay, this one I'll talk about, and then we'll be good to go. AUGO, Aura Minerals. So I was watching to see if the gold mining stocks would be the best. And this one survived everything. It survived the silver crash. It survived the whole war because, okay, it's down 18% 1 week in the middle of the war. But look at it. It just recovered so nicely. It's done so much better than GDX. So if you look at the whole other miners, look at that. This is way more uglier. And you see this? It's just stuck in that pink area. This is why I would say, like, it's very hard for me to think that GDXU could go a lot more than this because it has to break out of this pink zone. 13% more, right back to the top up here. So let's say GDXU. 36%. Let's see. It would That's a potential. It could go up to 340, 350, maybe, right? Maybe it could go up there. Okay. I think, yeah, Eric's hoping for 200, 300, I mean, 290, 300, somewhere around here. Maybe, but that's not very far from where we are. Okay. From this area. So it has to break out of this. That's the problem. But if you look at this stock, Aura, what the heck? What was the thing? AUGO. This guy looks a hell of a lot better, doesn't it? So the other benefit of it is it's a 2-for-1. It's a head and shoulders type stock because it has gold and copper mining. So it does copper and gold mining. So if you were looking for a copper miner next, don't worry, just buy this one. It's head and shoulders. You got your conditioner, you got your shampoo, all in one stock. So I think this one, the way it's moving from 3 weeks ago, I like it. So I've been eyeing this one. I said, like, okay, let's see. Now it's breaking out. Look at that. Perfect. This thing is doing it a lot better than the other ones. Okay, and then let's look back at the natural gas stock, LNG, Cheniere. Okay. So it's pulling back with everything else, right? The whole gas and oil sector. So here's our level here. It's probably gonna survive this. So somewhere around 255 is where it's gonna land. It might not land there, right? It could just be hanging out here in 260. But yeah, this is still okay. You got initial down here. This is probably the stock to buy next. I think natural gas will be the one that will last the longest out of all the other type of oil gas companies. Cheniere is probably going to be the best performing one. So LNG is probably that's the one. So you got a whole slew of stocks to look at. That's it. Those are the first sets. Okay, this is first set. This one I put in the boomer stock way back when. It still does good. So GE, Vernova, nuclear energy, power plants, utilities, anything to do with energy infrastructure, GEV. There you go, GE Vernova, and what else? VRT. I think VRT, same thing. Still good ever since earnings. Look at it. It ignored everything, all the noise during Iran. It didn't care. So it has earnings pretty soon too. So I'll watch that one. So VRT, and then Teradyne AI, I guess, kind of AI. I don't know why they think it's really just AI, but all right. But it's semiconductor test, kind of like Air too. Good, very good chart. So it survived. It survived through that. So we're gonna watch those going into earnings. We're gonna see if the like S&P 500 goes down. The next move down on the S&P 500, I'm gonna tell you what prices I expect you guys to buy those stocks. Those will be the first few stocks, okay, to look at, because they're already strong. They already have conviction. They can go a lot higher. And then after that, though, you know, we'll look at these software companies. Like, okay, let's look at the trash. Okay, what's the trash? So I looked at the strongest. They go strong. They'll stay strong. Okay, good. But what about the garbage companies that are already making a bottom? They're about to go up again sometime down the line. Moderna is one. Okay, this is going to be the healthcare stock that I'll be like, yeah, see something to get for sure. And this one actually has a levered ETF too. So maybe we'll get one where we go up. MRNX, I think was it. Yeah. So yeah, this one I'll talk about down the line later. But first, like let's just watch the software stuff first, see how low we go, and then we'll decide. All right. And see how high semiconductors goes, because this is getting ridiculous. You can't go up here and then the other side of NASDAQ goes down here. It's going to make it very hard for the NASDAQ to go anywhere. It's just going to go sideways again. So we're just going to go sideways for another 3 months, I guess. Semiconductors goes up, software keeps going down, goes sideways for 3 months, Is that how it is? Okay, maybe. We'll see. So that's what I think you're gonna have to worry about. All right, what's up, Herman? Yeah, yep, Herman. What's up? I already said hi to Solid Snake, I think. All right, thank you. Yeah, yeah. Big Dog Sports. What's up? What's up? So yeah, that's what I'm gonna say. Now the other thing to watch now is look at South Korea. Okay, South Korea looks like this right now. So after that whole Iran ceasefire thing, it's one of the very sensitive countries because they import a lot of energy, a lot of materials, and they export a lot of goods. And if you look at it compared to, let's say, silver, let me add silver here. Silver, SI, let's do that. Silver, and then let's add semiconductors. Okay, let's add that. Okay, so you see, like, semiconductors, silver kind of had like the same pattern. It had the first top right here in late January. Okay, so a lot of the memory stocks kind of pushed semiconductors a bit further than they should. Okay, and you see like that follows South Korea very well. So South Korea is basically just another semiconductor ETF, honestly, at this point. So yeah, let me make it bigger for you guys. Okay. Okay, and let me get rid of the drawings. Let me get rid of the drawings here. Hide indicators. So you can see, like, yeah, what's going on? What's going on? Let me make this a big line. How about that? You see that? It kind of matches, right? Right? It really follows semiconductors right now. So there's really not much difference. And let's get rid of that. So we're going to have to really look at where South Korea is going to go from here. I think that's really going to tell us how the economy is going to go, the global economy, because, yeah, South Korea is really a big bellwether of the global economy. So let me get back here and go to share my screen here. Okay, let's get back to here. Let me close this. Don't need it anymore. All right. So let me get this. Let me do this. Okay. Let me do AI search. Let me do this. Korean won. Okay, it's highly sensitive to the global economy due to South Korea's heavy reliance on exports, making it a proxy for global trade, health, and risk assessment. As of April 2026, the won has faced significant weakness, breaching 1,500 won per US dollar, driven by Middle East tensions, high oil prices, and capital flight into safe haven assets. The won closely tracks fluctuations in global demand, particularly in the tech and semiconductor sectors, and is sensitive to economic policies of major trading partners like the US and China. During global uncertainty, investors often sell won-denominated assets for safe haven currencies like the US dollar. Another reason why everybody just runs back to the dollars. Now, the Japanese, however, I think they really just go back to gold now. So if you listen to some of the old Samantha LeDuc stuff, we'll mention it again, like the yen carry trade. I think what's happening now is that people used to be afraid that the Japanese would sell their U.S. stocks and run back to Japan with their yen. So they convert their stocks into dollars and dollars into yen. Now it seems like they convert their stocks directly to gold. Okay, so they take their dollars. They basically don't really hang out with the dollar too much. So there's not too much pressure on the dollar anymore with the Japanese. Maybe, I don't know. That's her theory. So maybe we'll go over that sometime when we get to the point where we have to worry about the dollar again. As a large energy importer, rising gold oil prices from Middle East shocks cause increased import costs, putting downward pressure on the won. Increased overseas investment by Korean institutions, such as the National Pension Service, contributes to structural demand for foreign currency, weakening the won further. Okay, so this is why you have to look at the Koreans. I think that's kind of how it is. They really are a big bellwether. Okay, so let me play this video, and it relates to Africa and a little bit to Korea. So I'll play a little bit of it.
Five reasons why Nigerians can't run a country. One would be the Ajaokuta steel mill. Number two would be the national grid. Number three, Lekki Peninsula drainage system. Number four, driving license and standard. And finally, Abuja. The Ajaokuta steel mill is located in Kogi State, Nigeria, originally built by the Soviet Union for $8 billion, which is equivalent to $37 billion today. The mill was designed to produce 1.3 million metric tons of crude steel annually, with the capacity to expand to 5.2 million tons. It spans 24,000 hectares, making it the largest steel mill in Nigeria. Its coke oven and byproduct plant are larger than the combined capacity of all four Nigerian refineries. No nation can industrialize without a robust steel industry, and Ajaokuta was built to be the foundation of Nigeria's industrialization. The steel plant has the potential to employ 10,000 technical staff and create 500,000 indirect unskilled jobs. Nigeria possesses all the natural resources necessary to support this steel mill, unlike Japan and South Korea, which lack such resources but rank among the top 10 steel producing countries on earth. Unfortunately, Nigerians could not even manage, let alone complete, such a monumental project, which could contribute as much as 30% to the country's GDP. South Korea started its steel industry at the same time as the Ajaokuta steel was being developed. South Korea generates $50 billion from steel export, producing over 60 million tons and providing jobs for over 40,000 people. South Korea's steel industry alone generates more revenue than Nigeria's entire annual economic output. Meanwhile, Ajaokuta steel, started in 1979, is still languishing in underdevelopment. For over 30 years, Nigerians have become a...
Okay, so I think that shows you the weakness in the globalization that we did since the 90s. I mean, once we had COVID-19 lockdowns, and now with the Hormuz Strait and all this Taiwanese like worrying about if China is going to take Taiwan and all that stuff, you see like the global supply chains for this high-tech civilization we have is very, very fragile. Like you could attack certain areas, certain trade routes, and you could just make everything complete disaster, right? A complete disaster for the whole world. It's incredible to think like we don't have diversified places to generate resources we need. Like there should be an initiative to try to do something here to fix these problems, because everything's reliant on South Korea. Seems like it. Like South Korea, Taiwan is like what? Like these small tiny places generates everything we need in the world. And that's why your RAM prices keep going up, right? And steel too, apparently. So there's going to be a lot of issues coming down the line, and we'll have to resolve them one way or another. But in the meantime, yes, we'll have to look at the stocks. Where are we going to be? There's going to be basically material sector. Let's look at the material sector. here, right? This is the material sector here. How high can we go? How high can we go? 61 on XLB ETF on the materials sector. There's a lot of pressure now to generate materials. I don't know if Africa can catch up, because I think now would be a good time for African countries to do something. The people are going to be looking for places outside, right, of Asia to do this kind of work. And it's getting ridiculous. I think that's why you see China always going around Africa trying to get deals made with governments. And it's not easy. It's really not easy. And this is an area where there's going to be a lot of competition to create resources. And we're going to have a huge global population. I mean, of course, I'm not going to get into demographics and other population things, but yes, overall, yeah, there's going to be a lot of Africans, and there's going to be more middle class, because a lot of the Southeast Asians, are getting richer too, and they're going to catch up with Chinese middle class. There's going to be a lot more people that want junk, that they want their little iPhones, Huawei phones, whatever. And if everything goes through Taiwan and South Korea, good luck. I think there's going to be a point where you can't make the output. So if all these resources are going to get more expensive, that's the time to start making money. So Africa has a chance, if they want to get a leg up, since they have all those resources that practically go into all your devices, like cobalt, tantalum. I think there's a war in the Congo still between Rwanda and the Congo. I don't know if that got resolved over some mines for some rare earth metals. Oh my God. I think I've read an article once, but yeah, there's going to be more issues coming down. Okay. What else? Let's see. Let me read a couple articles. Let me see. Do I have time? Yeah, I got some time. Okay, guys, let's see. Okay, I'll read this one first. Okay. All right. Let me read this one first. All right. Okay. And get the music on. All right, let's get some music on. Okay, so this is a subscription-only article. So if you click on the link in the description, if the link is all there for you, you won't be able to get it, I guess. But anyhow, I'll read it for you. Significant structural change in the U.S. stock market may be underway. All right. So what kind of changes? Are going to happen? The ratio between the NYSE and the S&P composite could be in the process of breaking out, I guess. Oh no, maybe he does mean that. Okay, breaking for the NYSE composite, New York Stock Exchange. You may not think that's important, but in reality, it could herald some important structural changes. First, though, let's take a closer look at this relationship to see what might be taking place. Our first chart plots the ratio between the NYSE and S&P 500. This relationship is currently pressing just beneath a 3-year resistance trend line. That barrier carries considerable weight, not only because of its duration, but because the ratio has failed roughly 10 times to overcome it since 2023. Its shallow downward slope further reinforces its technical importance, as slowly descending trend lines often act as durable ceilings. Two developments make the current setup especially compelling. First, all three KSTs are in a bullish mode, indicating that short, intermediate, and long-term momentum are aligned in favor of an eventual upside breakout. Okay, so let's summarize. What does this mean? This means that the total New York Stock Exchange stocks, all of them, compared to the S&P 500. The S&P 500 are only the 500 best large cap stocks. So the best stocks, the best companies in the United States, mostly. There are a few international stocks, but in general, United States led stocks and multinationals that are heavily in the US. Okay, so compare that with the trash. Okay, that's what it means. So if you compare every stock in the stock market and compare it to the 500, if this line gets above the green, so the black gets above that green, then that means the garbage stocks are starting to compete well with the 500 best stocks. Okay, that's what he's talking about. Okay, the second chart, number 2, reveals that the decline in the NYSE relative performance has been in force all the way back to the financial crisis. The blue box highlights the action displayed in the previous chart, which can now be seen to represent only a small portion of that long-term secular downtrend. As a result, a month-end close above the dashed green resistance line would complete the 3-year base and constitute a decisive violation of the entire secular downtrend line that has governed the NYSE underperformance for more than a decade. Finally, the percentage price oscillator has tentatively poked its nose above its equilibrium line. We can't place too much weight on this development since the previous 2 signals were disappointing. However, it's possible its positive crossover is not a negative at this point. Okay, let me just zoom in this thing. So this green area you see here, you know when that was? That was during Bush number 2. So during Bush number 2, when we had Desert Storm, Afghanistan, you know, all that stuff that was happening, tech stocks didn't do very well. Okay, I was still in school at this time. I was in grad school. So I was buying tech stocks though because they were so boring. A lot of people got burnt in the dot-com bust. So in that case, what they did was they ran into housing. So they bought a lot of houses. That was one factor that caused the 2007, 2008 financial crisis. The other thing they were buying oil, gold, silver, copper. They were buying those things. Those stocks did very well. Oil companies did very well during this time, during Desert Storm and all this. Gold, silver also did very well during this time. So when we actually have this kind of movement here where the garbage companies outdo the performance of the top 500 companies, it's telling you that, I guess people are broadening their exposure and not doing tech. Or maybe they're going outside of stocks altogether. So this is kind of where you have to look at it. When you look at this, however, right, starting from 2011, it started going down, this line. And we're still going down, right? Tech companies were getting better and better and better and better at performance. So by the time we got into COVID here, tech companies still outperformed. They are still the outperforming side of stocks. People still go to semiconductors right now as we're speaking. They ran right back into semiconductors. They don't care. They want tech, whatever tech. Even if they're not buying software, they're buying hardware. So they're doing something there, right? But they're not going into oil. That's what I'm saying. They're not going to silver, not going to gold. The last several months, we've seen gold, silver miners do well. We've seen copper miners do well. We've seen aluminum smelters, aluminum makers do well. And so something is changing. We're seeing the oil and gas now doing well too. If this turns out to be a genuine secular reversal, what are the principal implications? So yeah, should we read out of this? If this thing actually does break out, we're changing something here. Does that mean we're going back to the George Bush days? Is this where we should be thinking of, or is there something else going on? So we first need to have a better understanding of the composition of the 2 market averages. So the NYSE composite represents all common stocks. That's why I mentioned they represent every stock. Okay, So it include the ADRs, the REITs, okay? That means the real estate investment trusts, tracking stocks, foreign stocks, whatever is on the NYSE. That's roughly 2,800 companies in total. Approximately 1/3 of its market capitalization come from international companies. So that's another reason to be thinking, does that mean that people want to buy more international companies? I've been talking about Mexico and Brazil, so I'll mention them sometime down the line because they recovered very well, okay? We only talked about South Korea, but Mexico and Brazil, they're doing a lot better after having that whole taco trade. So they look very strong. So it could be, right? That could be true too. Maybe it's because people want international companies. The S&P 500, by contrast, is a curated universe of 500 predominantly U.S. large cap companies. That's what I said. That's roughly 34% of it is in technology. So 34% of the weight of the S&P 500 is in technology. And of the 34%, 7 of those companies dominate. So the index has largely been a story of a few giants: NVIDIA, Apple, Microsoft, Google, Amazon, exerting disproportionate influence on its performance. So let me see. 1, 2, 3, 4, 5. There's 2 missing. Tesla and who else? Meta. Tesla and Meta. Okay, so you have to add Tesla and Meta to this list. Those 7 make up the predominance of that 34%. So the NYSE composite, if the NYSE composite were to outperform the S&P 500 on a sustained multi-year basis, the most direct implication is that these mega cap tech leaders would begin to underperform or at a minimum fail to outpace the broader market. With that in mind, we can examine the 2 most important downstream effects. The first implication, okay, so technology underperformance. That's one, all right? So I think you can take a screenshot and read that yourself. What's the second implication? Superior performance by overseas stocks. So international stocks might do better. Okay, so here you can take a screenshot of that. There you go, take a screenshot. Okay, so the bottom line, we have to watch this ratio, because either it means technology is not going to be the place to be very soon. Okay, it's going to be George Bush time, or it's going to be George Bush time plus international stocks, or it could be both. Maybe international stocks that do oil, gas, gold, silver, lithium, right? There are a lot of international stocks that do materials, mining. That could be it too. So we mentioned some of them on this show, and I will mention them again as we get. So my first iteration of the Substack is just those main stocks on the top of the banner. Second iteration, we start looking at international stocks, whatever that. Okay, that's where we're looking at next. Okay, and then maybe some lithium too, and uranium. I know some of you guys want that. I know you guys want some of that. Okay, last article here. Okay, so we'll get 2 hours today. Let me see. I got time, right? Yeah, I got time. I can read one more article. So this was written in 2022. Why am I reading an old article here? Because if you remember back in 2022, this was written in April too. So it's like 4 years ago. People actually thought we were going to go into a recession. Okay. I think now we got to prepare for recession for next year. So I'm going to read this article, and you got to imagine that this article was written for the future, okay? For the future. And the future will come in about a year, I think's time. So when we start entering recession, we will start seeing the orange line move down. That's the stock market. The stock market looks ahead of the actual economic cycle. So the economic cycle is the blue. So it's going to have a recession sometime in the future, but the stock market will start preparing for a recession. So I want you to prepare for the stock market to prepare for the actual event. This is how you make money. You have to be there before the actual event, not be there when the event is happening, and definitely not be there when everybody already thinks there's going to be a recession. Once everybody starts talking about a recession, it's too late because the stock market is already starting to slide down. We have to start preparing and imagining that the next 6 months is the beginning of the top or the topping, like, let's say, like it's starting to slide, right? Sometime in the next 6 months. And then within a year, it's definitely obvious that it's topping. Okay. So just like imagine the Palantir chart where everybody thinks Palantir is going to puke now. I don't want to short it now. I want to short it at the toppity top. Okay. That's where I'm going to be. So I'm planning ahead. Okay, so when we are at a topping pattern, what's the sectors that do the best? The best sectors are materials, energy. We see that. Two of those are happening right now. Later on, we'll see consumer staples. So Walmart, Dollar Tree, Dollar General, Coca-Cola, okay, Colgate, Palmolive. Healthcare will be after that. So a lot of pharmaceutical companies they might run back into. So you might have the Ozempic. You got your Ozempic stock got beaten up, that Novo Nordisk. Maybe it's time to buy Novo Nordisk sometime down the line. And then later on, utilities. So any utility companies out there that you know of, you might want to look at, because I've noticed a few utilities that heavily do natural gas in the mid-Atlantic and the Northeast, New England area. So I see some New Jersey utilities are doing well. They got a lot of natural gas. And then after that, real estate. Real estate will be the final sector when we get to near to the bottom. Once we hit the bottom, after that, you start buying banks again. So that's what happens. Once you get to the top and then you start rolling over and then you start buying real estate, the next step is you start buying banks, because the banks is usually the very bottom. They start crashing a lot and then it'll start going back up. Okay. So banks will be the final destination, but we're not ready for the banks yet, even though I do see some banks look good right now. Okay. Every quarter, I try to do an update on the sector rotation model. We have the framework as described by Sam Stowall. The image above shows my interpretation of the various factors that affect this model. Across the top, you will find the 11 sectors. The orange sine wave represents the stock market cycle, while the blue line represents the economy as they move through various stages. Below the graph is a table that shows 4 macroeconomic metrics that influence the economy and the market and how they usually behave in each phase. So there you go. That's what I tried to explain. Okay. And then bottom here, you'll see, like, as we get into the top, you'll see industrials, rising production to flat, interest rates rising rapidly. So, well, I don't know what the Fed is going to do. We're going to get a new Fed chair in May. Let's see, yield curve. Yeah, it's going to it's already like re-inverted though, I think. Falling sharply, capital expenditures, consumer expectations. I don't know. Yeah, consumer expectations have always been kind of bad since COVID, so I don't know. Can't really follow that. All right, so let's see. So take this with a grain of salt. I gotta revisit where we're at in a few months and see if any of that is happening. All right, sectors. Let's see. This is what he's gonna do. He's gonna do the sector rotation graph, and he's gonna do this, and that's what we're gonna do later. Okay, down the line, but we're not gonna do that yet. But we have to look at each of these things. We have to look at consumer sentiment. Then we have to look at industrial production. We can get that data. And next thing, what's up? We look at, like, yeah, we are, let's see, early recovery, full recession, early recession, peaking. Okay, yeah, we're going to have to look at the treasuries. How's the bond market doing? We're going to look at the yields, how they're doing, the yield curve. Okay, we talked a little bit about this a few times already this year. I talked about the 3-month and 2-year or something like that, and I said that could figure out like the tops in the stock market. Yeah, so we're gonna have to go over this 6 months down the line, look at these things and say like, yo, is there a recession coming? If there is, then we have to act accordingly. So in 6 months, we will revisit this, okay? We have to watch these things as we move along because the signal has been set. The flag has been set. Oil has peaked. I mean, not pumped. That means that something's going to happen sometime down the line. All right. Gold went up. Then the next step was copper and oil goes up. All right. Those things will go up. And that's what's been happening. After oil, food goes up. So inflation goes up. So that's what I'm waiting on next. I'm watching the food prices now. All right, guys. Very good. So remember, WebL, AIBU, CRWL, PALU. I'm watching as the software side of the NASDAQ keeps slipping and sliding. So I will come back sometime tomorrow. I don't know if I'm going to come back tonight. I don't think I'll have anything tonight for the Substack ready for you. But tomorrow, that's what I'll start. So this kind of gives you the idea where we're going with that whole DeMark stuff at the beginning. I'm going to try and explain it as best I can in the Substack. But if I can't, you know, at least you have these presentations where I go over what I say in the Substack. And then that's it. Then we can start moving, chugging along very mechanically. Now it's going to be very mechanical. Okay? And we have to do this right. Because I think it's going to get really confusing in the next few months here. But yeah, Trump did it. Trump caused the pain. Now we're going to have to live with the results in the next 6 months. All right, guys. Later.